So, Dollar Tree, one of the biggest names in retail, and their latest financial report just dropped. And let me tell you, it's a fascinating story. We're talking strong sales, confident shoppers, and one massive company-altering decision. Let's dive in and really unpack their Q2 2025 earnings.
You gotta love it when the CEO, Mike Creedon, kicks things off with a statement this confident. He's basically pointing to their sales numbers as proof that Dollar Tree holds a unique position in the market, especially with the economy being what it is today. This really sets the stage for everything else we're about to dig into.
So just how big was this quarter? Well, the whole story, the entire thing, can really be boiled down to two major headlines that absolutely define their performance.
And here they are. First, the company posted some seriously impressive sales numbers. We'll get into those in a second. And second, they made a huge strategic pivot, shedding a massive part of their business to become way more focused. Let's break down those top-line numbers first.
Okay, the first key number you absolutely have to know is 6.5%. That's the jump in their same-store sales, which, as you know, is a critical metric for any retailer. It tells you how much sales have grown in stores that have been open for a while, so it gives you a really clean look at the company's underlying health. And a 6.5% jump, that is very, very strong.
All right, the other headline number is 77 cents. This was their adjusted earnings per share, which is just a way of looking at profit that smooths out any weird one-off financial stuff, and it actually beat expectations. Part of that, the company notes, was thanks to some favorable timing on tariffs, which gave them a nice 20-cent boost. Still, it's a solid figure that definitely got Wall Street's attention.
Okay, so we've seen the big results. Pretty impressive, right? But the real question is, how did they get there? To understand that, we need to dig a little deeper into what was actually driving that awesome sales growth.
And just so we're all on the same page, let's quickly define this key retail term, comparable store sales, or what you'll often hear called comps. It's pretty simple. This metric only looks at sales from stores that have been open for at least 15 months. It filters out the noise from new openings to give us a true apples-to-apples comparison of performance.
Now, what's really interesting is how they got to that 6.5% growth. It was like perfectly balanced. About half of it came from an increase in customer traffic, so more people walking through the doors, and the other half came from a higher average ticket, meaning each person who came in spent a little more. This is exactly the kind of healthy, balanced growth a retailer wants to see.
So that naturally leads to the next big question. If people are coming in more often and spending more money, what exactly are they putting in their baskets?
Well, you can see it was almost a perfect 50-50 split between consumables, the needs, like food and cleaning supplies, and discretionary items, the wants, like party decor. And here's the crucial point. Discretionary sales grew by over 6%, which is their best performance since late 2022. That is a huge signal that shoppers are feeling confident enough to spend on more than just the bare essentials. All right, so that covers the strong sales performance. But believe it or not, that was only half the story this quarter. Now we get to that massive strategic pivot, the single biggest piece of news to come out of the company.
And here it is. On July 5th, Dollar Tree officially completed the sale of its entire Family Dollar business. This is a huge move. They've been operating these two distinct brands for years, and now they've decided to go all in on their core namesake banner.
And look, this sale wasn't just about strategy. It was also about the money. In total, the company monetized about $800 million in cash from this deal. That injects a huge amount of capital right onto their balance sheet, giving them a ton of flexibility for things like share buybacks, new investments, or just paying down debt. And honestly, this quote from the CEO really just says it all. The theme here is focus. By selling Family Dollar, leadership can now direct, as he puts it, every ounce of their attention and resources towards strengthening the core Dollar Tree brand. It's a huge bet on simplification and concentration. So, okay, they've streamlined the business, they've got cash in the bank. What does the rest of the year look like now? As you'd expect, the company has updated its financial forecast to reflect this new, leaner reality.
Because of that big sale, their whole financial roadmap for the rest of the year had to be updated. So here's what they're telling us to expect.
When you look at this forecast, one word comes to mind: confidence. They're projecting full-year sales over $19 billion. They also expect that comparable sales growth to stay strong, somewhere between 4 and 6%, a clear sign they believe the momentum we just saw is sustainable. It all points to a solid earnings outlook, which really reflects their confidence in this new, focused strategy.
Which brings us right back to where we started. The company has made its big move,
It's refocused its strategy, it's got a strong balance sheet, and it's seen customers respond really positively. So the big question now is, can all of this come together to truly cement that unique position in the retail world that their CEO is talking about? That's what we'll all be watching.